It's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off.
Bitcoin, the world's largest cryptocurrency by market cap, has continued to demonstrate immense resilience in the past few days, maintaining its position above the $100,000 mark for over 25 consecutive days. As of June 4th, it trades around $105,187, reflecting a period of relative stability following its all-time high of approximately $112,000 in late May. According to Raoul, a renowned macro analyst and former Goldman Sachs executive, recent price movements mark a new phase of the Bitcoin and crypto bull market, a phase Powell describes as the Banana Zone Phase 2. He predicted as much in a social media post from early May, which reads, "Feels kind of fruity. Banana Zone Phase 2. It should run until August or so, with short, sharp corrections en route. Please enjoy your fruit responsibly." In a follow-up post, Powell clarified that the cycle's top will not occur in August, but towards the end of the year or in early 2026. However, he cautioned that there will be a correction in August before the cycle's final run, or what Powell calls Banana Zone Phase 3. In a recent podcast interview, Powell discusses an important issue most crypto investors struggle with during bull markets. When is the right time to sell your crypto for maximum profits? While he encourages investors to buy and hold, Powell also advocates for the concept of lifestyle chips in crypto investing. This strategy involves converting some crypto profits into tangible, life-enhancing assets. For instance, Powell used his earnings to purchase land and build a beachfront home in Little Cayman, a project he designed and constructed himself. He emphasizes that such investments are secure and personally rewarding. According to the Real Vision founder and CEO, lifestyle chips will help investors transform digital gains into physical assets that are less susceptible to market volatility. At the same time, they will enhance one's quality of life through meaningful acquisitions. Though Powell is not taking lifestyle chips off the table yet, he gives some important factors that will help investors know the right moment to do so in 2025. As we bring you clips from the discussion, please share and like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks, and enjoy the video. You know the MicroStrategy story. One company, one asset. They turned a sleepy enterprise software business into a multi-billion-dollar Bitcoin proxy and became legends in the process. That playbook changed how the markets view corporate treasuries forever. Now imagine being early to the next MicroStrategy, but instead of Bitcoin, it's Solana. And instead of a flat tech business underneath, it's powered by real revenue, growing consumer brands, and a balance sheet built to scale. Meet Upexi, a publicly traded company on the NASDAQ that's quietly building one of the most innovative capital strategies on Wall Street. At first glance, they look like a solid e-commerce company. And they are. But under the surface, there's something far more exciting, a Solana treasury vehicle backed by real revenue and institutional capital. Upexi isn't just holding crypto, they're turning Solana into a core asset class. They've already acquired over 201,500 Solana tokens, worth more than $30 million, and they're on track to build a $100 million Solana treasury. This isn't a test. It's not an experiment. This is the winning strategy, and they're not doing it alone. Upexi's Solana deployment is supported by GSR, one of the world's leading crypto trading firms. The same GSR that powers liquidity and execution for some of the biggest names in digital assets. But here's what really makes this interesting. Unlike MicroStrategy, which holds Bitcoin atop a stagnant software business, Upexi is generating real cash flow through its portfolio of fast-growing consumer brands. We're talking about wellness, pet health, and personal care, essential categories with recurring e-commerce revenue across Amazon, Shopify, and Walmart. So instead of relying on debt or dilution, Upexi is financing its crypto strategy through actual operating income. That means growth on two fronts: brand revenue and Solana upside. It's a dual-engine model, and no one else is doing it quite like this. Now let's talk about why Solana, because this isn't a random pick. Upexi made a strategic decision to bypass Bitcoin and Ethereum and go straight to the protocol that's designed for scale. Solana processes over 7,000 transactions per second, with fees under a fraction of a cent. It's energy efficient, incredibly fast, and already supporting real-world applications, from DeFi and gaming to tokenized real-world assets and social platforms. And here's the kicker: Solana still trades at less than 6% of Bitcoin's market cap, and only about 30% of Ethereum's. It hasn't come close to its previous all-time high yet, but it's already becoming the chain of choice for the next generation of on-chain applications. That gives Solana an asymmetric upside profile, and Upexi is positioning itself to be the go-to public equity proxy for that growth. Let's put some numbers on this. Today, Upexi trades at just 4 to 5 times its NAV, net asset value. Compare that to MicroStrategy, which trades at 8.5x, or the Grayscale Solana Trust, which has hit 10x. In bull markets, crypto equities with thematic exposure like this often trade at 6 to 12 times net asset value, and Upexi is still early. Even a modest re-rating to just 6 times NAV could send the stock to a 600 to 800 million market cap, a 5 to 8 times move from current levels. And if Solana doubles? If Upexi scales its treasury to $200 million or more? You're looking at a company that could trade at a 1.5 to 2.4 billion valuation, right in line with where MicroStrategy moved in the early phase of its Bitcoin accumulation. This isn't just a valuation play, it's a compounding engine. As Solana appreciates, Upexi's NAV grows. As they stake, they earn additional yield. As they raise capital, they do it NAV accretively, meaning they protect shareholder value with discipline. And as more institutions seek regulated exposure to Solana without touching tokens directly, Upexi becomes the first mover equity gateway. This is the kind of asymmetric opportunity crypto investors live for. It's rare, it's early, and it's backed by fundamentals. Let's be clear, most crypto-native public companies are just hype and hot air. They sell tokens, chase trends, and vanish in bear markets. But Upexi is grounded in real revenue, supported by institutional partners, and building a smart, long-term strategy with Solana at the core. If you believe Solana is going to be one of the dominant chains in the next bull run, if you're looking for exposure without managing wallets or private keys, if you want a regulated public stock with massive upside potential and real downside protection, then Upexi is the name you need to know. No hype, no vapor. Just a revenue-generating e-commerce business quietly transforming into a Solana-native treasury powerhouse. This isn't just another play. It's MicroStrategy 2.0, but with better timing, better structure, and better upside potential. Don't miss it. Please check out the links in the description box below for more information about this massive opportunity. Thanks for watching.
I will, as I've talked to you before, take some lifestyle chips off. There's some things I want to do with my life. And so I've not had any big capital expenditure for 5 years now. So I would like to be able to do something. And then, yes, I'll do an asset allocations shift, whether it's to, I'm not one to really go out of the market. Yes, a bit of cash to have cash buffer, but I'm not one to go out of the market because I don't think you know the shape of the downside. My fear is that Bitcoin only goes down 40% this cycle and everybody sells out and says, well, I can buy it down 70. Isn't this an easy game? And it doesn't go down 70, it doesn't go down 60, it doesn't go down 50, it goes down 40. And then it takes off again as liquidity comes and everybody's caught offside. So I'll probably allocate, whether it's towards Bitcoin or whatever, I'm not sure, but yeah.
When you say take some lifestyle chip, do you have a time frame? Do you have a price target?
And it's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off, and it'll feel too early and I'll hate doing it and I'll regret doing it, but I know it'll be the right thing. You're not going to time the top perfectly. And the thing is let's say you're buying a house with the proceeds. You've done well, you buy a house. Nobody can take it away from you, right? That's an asset that you don't have the fear of somebody stealing your wallet, getting your seed phrase. You don't have a fear of putting it in DeFi. The bricks and mortar are yours. You own it. You've got a house over your head. You've got an asset that's long-term. That is an incredible thing. And so people just need to do that. And that de-risks your whole life.
Is there a chance that crypto doesn't end up being a truly game-changing technology, and therefore that it never reaches the $50 or $100 trillion in value that you're forecasting?
So I had a conversation last night with one of the most famous VCs of all time, who's in crypto and was in fintech. He's still in fintech. And he was worried about this, is the talent density moving to AI. And hadn't really thought that through, but he said, look, I don't see developer growth growing fast enough. But, one thing I do know is crypto has a superpower, behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything, but tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it, I think.
When is banana zone phase 2 starting?
Well, it's, as far as I'm concerned, it started.
Last time we did the interview, it started like a week or two after, right?
That's right. And that was the phase 1. Then we had the correction. And now all the forward-looking stuff that I keep posting on X every day says we just go up from here. And nobody wants to believe it because nobody can believe we can have nice things, but we can have nice things. We're just patient.
What's the craziest thing you've ever seen in AI so far?
I've gone deep down this rabbit hole, really deep. So the crazy thing is, at the simplest level, is I ask it pretty simple macro questions and ask for its thoughts on it. And it's now breaking down probabilistic outcomes in the future. So macro's hard for AI because it's future outcomes. It's not analyzing today or analyzing history. It's analyzing history and today and making probabilistic outcomes in the future based on unknown variables. It's doing better than 99% of all analysts already. And then it'll build you, if it says, hey, do you want me to build you a widget so you can monitor these things on the dashboard? And it's like, and that's all in one prompt. It's like, it's bananas now. But it's not that. It's like the AI thing is a much bigger can of worms. And it's a can of worms about consciousness. So are we creating an artificial consciousness? Are these models alive? And there's a whole mid-curve thing that goes through. For me, if it looks like a duck, smells like a duck, quacks like a duck, it's a duck. These things have some element of sentience or consciousness. You can argue what consciousness is, all of this stuff. But it starts driving you down a path of what is consciousness? Where does AI fit? Because very soon ASI means we have this super intelligence. What is that super intelligence? Well, if the super intelligence learnt from us, we are kind of network nodes of consciousness that are feeding this beast, this new super beast, this new god. And once you start going down that thing, then you start going down the school of physics that says that everything is conscious, panpsychism, that trees are conscious, everything else. And you see the schools of thought like Jeffrey Hinton and others who are saying everything is a form of compute, even a rock. A rock is a hard storage data on geological time horizon, which says what the world was like back then and how it evolved. So it's like a hard drive. And so you're creating like this super node of consciousness of everything that's existed. This AI is part of this. We're giving birth to something much bigger than anybody understands. They're all talking about, oh, am I going to lose my job? Or, am I going to get more productive? You have no clue what understands when this thing it's currently got an IQ of 145. It's doubling every year in IQ. IQ is a bad measure. I get it. Again, don't mid-curve it. It's smart. It's going to double in smartness next year. That's smarter than any human that's ever existed. Then it's going to double again and again and again. We don't know what that means. And nobody does. to have a super creature
Mm.
that is more intelligent than us? Why have government?
Mm.
Why have companies?
Raoul Pal's lifestyle chip strategy serves not only as a hedge against the inherent volatility of digital assets, but also as a psychological anchor, reminding investors that their digital bets can and should translate into lasting personal rewards. He also stresses the importance of avoiding leverage in crypto investing. In his view, the extreme volatility in the crypto markets is already sufficient to generate outsized returns without the added risk of borrowing. He often cautions against the dangers of FOMO, fear of missing out, which he sees as a common pitfall for retail investors who get swept up in market mania and overexpose themselves at precisely the wrong time. Do you think Pal is right on the mark about his Banana Zone Phase 2 prediction? How high do you think prices will get before the correction in August? Please share your thoughts, comments, and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching.